is Tuesday, February 25th. It is SMCI day. We're going to go over a lot. We're going to go over SMCI. It's D-Day. We're going to go over Microsoft, how they tanked the market yesterday and then made the market come back. I had a conversation with Perplexity about top oversold stocks. I'll tell you what those are. Tom Lee is bullish. News alert. Tom Lee is bullish, and he's got 5 stocks that he added to his granny list. And Charlie from Zip Trader went over that. We'll talk about that. Now, there's a great Goldman Sachs. The stocks that matter the most, according to hedge funds, these are the ones that are buying. Power, they just got killed yesterday because of the Microsoft stuff. 6-pack stock to navigate this market. And we'll go over NVDA earnings. We will go over yesterday's earnings, from Domino's to Hims to I had all kinds of puns with Hims. Hey, we need a fluffer. Somebody get the fluffer. TEM Pelosi stock. We'll go over how Home Depot reported this morning and essentially have said, hey, there's stuff going on here. Zoom. And then tonight's earnings, we've got 10 about them. I'm going to zip through all 10 and tell you what I like about them, what I don't like about them, and Bitcoin, crypto crash. But I first want to start out with a little demonstration here, okay? Because we're going to go over a couple of demonstrations. First is this Trendspider, okay? I went up here and I just typed in bullish, okay? These are scans. These are things that you can look up. And bullish engulfing candles. And I want to scan the S&P 500 for bullish engulfing candles. And it pulled up this list, okay? You can see AIZ. This is Assurant. I don't know Assurant, but boy, that stock looks pretty good. BDX, this one, not so great. EQR, which is Equity Residential, looks like it's in a little bit of an uptrend. Might be a good one. Danaher, which comes up in Perplexity. Ironically, it comes up in Perplexity. My question on that. TAP, which is Molson Coors. It comes up. But I want to bring up one that I actually found. And again, a bullish, go and Google bullish engulfing candle, because it is bullish. Okay, it is bullish. And it typically means that you can look for some type of move, and maybe it's in the bullish. Again, this is technical. Now, workday, we can look at this one here. You can see it hit 307, and then we've seen it come down. But you've seen a sideways trade. Does this trend line matter now? Not really. It looks like it held up on support there. It was resistance. It held up on support here on November 28th. We haven't seen it come down there. Now, you're just touching the 200-day. You're just above the 200-day right there. Your 50-day bounced off. Again, a very bullish move. Your MACD looks like it's crossing up. Your RSI, 49. So it's not oversold. Now, the algorithm has you out. But look at their performance on this one. 74% versus 37% if you bought and held for 2 years. That's a good thing. That means maybe you want to look at entering this one as we start to see it. Now, the afternoon candle on this one was not bullish, but it was a full, if we go to the daily, you'll see it's a bullish engulfing candle. Okay, this is the daily. The daily will react a little slower than the 4-hour, but I like my 4-hour algorithm. So their earnings are coming up today, February 25th. This is interesting. A bullish engulfing candle before earnings. It might be something you want to check out. This is how you use Trendspider. If this type of thing interests you, you don't need to know what a bullish engulfing candle is, because I can go over here to Perplexity and I can say, what is a daily bullish engulfing candle? And is it a good thing? And we're just going to type that in. Use the tools that you have. You can basically, if your chart can scan for this stuff, go and scan for it. But a daily bullish engulfing candle is a powerful reversal pattern that occurs on a daily chart. It consists of 2 candlesticks, a smaller bullish downward candle followed by a larger bullish candle that completely engulfs or covers the body of the thing. The bullish engulfing candle is generally considered a good thing for traders looking for potential buying opportunities. Trend reversal, strong buying pressure, reliable signal, entry point, institutional interest. Workday, bullish engulfing candle. Maybe it's a trend reversal. Have we seen that one where this one is now getting ready to move up? Again, it's an earnings day. You've covered this gap up above. You've got your 200-day down here at 224. If I were playing this on earnings, I would bet that this one would go up. Let's go to Earnings Hub and let's look at Workday. Workday right here. They reported last time earnings per share $1.89. They're expected $1.78. Reduced expectations. We look at the revenue, $2.18 billion. Their last time, $2.13. Let's go over to Seeking Alpha. Let's look at what Workday is here in Seeking Alpha. Again, strong buy in the quant, bullish engulfing candle. This is how you use the tools that you have in front of you. Okay? That's why I think Trendspider is so important to have. So let's go over some other stuff. I'm going to move back here to the core investments because right now you're seeing a lot of movement in some of these, but I want to go over a little bit more about procedures and using the tools. I went in yesterday. Oh, by the way, if you haven't seen this one is phenomenal. Go sign up for the newsletter because this one, I'll link to this one. It's basically two chat AI bots that talk to each other. They ignore the English language once they find out that it's two chatbots, and they basically start talking in machine language, which is like, if you're old like me, you remember the 56K modems and the dial-up modem sound. That's what it sounds like. That was awesome. And so yesterday, let's get back to it. How can you use the tools that you have? Well, Perplexity is my current choice for AI, and it's just given me a very good response for typically things that I'm putting in. So if you have not used it, Perplexity, Grok, Google Gemini, you can use ChatGPT, whatever you want to use, go and use AI. These are free tools for you. And I said to it, can you give me a list of stocks in the S&P that are oversold right now and have a reasonable valuation with a return of over 10% in the last 2 years? And I'm going to link to this. This is the answer. Okay. United Health Group, Caterpillar, Danaher, Lockheed Martin, Merck. Okay. While specific 2-year return data isn't provided for these stocks, their presence in the S&P 500 and their current oversold status suggest they may offer good value. However, it's important to conduct thorough research and consider overall market conditions. So then I followed up and I said, of those 5 stocks, which one has the best forward estimate versus analyst price target? And it looked. You don't need, again, this is all free tools. This isn't Seeking Alpha. This isn't anything that you don't have. But I'm going to show you how you take this tool of Perplexity and put it into the tools that you have. Your charting and then your fundamental. Okay, we can go and look at fundamentals on FinViz, and you can do all the research that you want on FinViz. I'm going to choose to use Seeking Alpha. You can use Thinkorswim. You can use Webull for their charting program. I'm going to choose Trendspider. So United Healthcare, I don't want that one right now. It's beaten up. I mean, United Healthcare is beaten up. We know this one's oversold, but we also know why it's oversold. Okay. And I'll show you the weekly. I've told you before that I think that 450, 461 right now provides some support on a weekly. Now, 460, it makes sense to start buying it. It's oversold. It's a good company. The problem is that you have a lot of issues with currently Congress and stuff. Congress is cutting Medicaid. Well, I may not want to go into it. So let's look at DHR, because right now I don't care about the fundamentals. United Healthcare, I just don't want to get into because of the story. I'd rather buy that 470 than 460 when it's on an upward trend. Danaher, it loses me 1.5% versus 7.2%. But I clearly see this one is oversold. It's under its 200-day. What happened the last time it was under its 200-day in October 2023? You went for quite a run. So let's see DHR. Let's go and see the fundamentals. It is a buy? No, its valuation stretched. Wall Street thinks that it's a buy. They think it's worth 267. But you see, they're chasing it down. When you look at revisions, it doesn't look good. It doesn't look good. So let's go look at Merck, MRK. That one might be an opportunity. Now, I don't know anything about Merck. I need to find a strategy that works, but you can see we've got a gap above. So technically from 91 to 98, this one might be an opportunity to fill that gap. It's an earnings gap down. Any reaction is an overreaction. So this one might be an opportunity. You can see the MACD swings pretty high. Am I looking at this one for a long term? No. But what's happened the last couple of times it's broken its 200-day? Well, your 50 days moving negative. I would be looking at this one to come up to 100. I would be looking between 98 and 100, and that's where I would go. Does it make sense? Well, let's go and look at some of the fundamentals. Because some of the fundamentals, it's a hold in the quant. A on valuation, B on growth. The revisions suck. So it would be a short-term trade for me. Where does Wall Street think that it's worth? They think it's worth $114. This is how you use the tools that you have in front of you. Okay? That's it. I mean, it's as simple as that. And I will include the link to the Perplexity questions that I asked. You can use AI to try and find some of these opportunities. Doesn't mean that I'm going to take this trade. Just be forewarned. I may not take this trade. I very well might. But I'm on air right now, and I'm not looking to trade live on the air. Your financial gain is your responsibility, not mine. Do not follow my trades because I will lose you money. You know, my MSTR that I got, MSTX that I got out of yesterday is a prime example. I got out of it. I just lost money. I was cutting my losers. So, before I talk about this, let's talk about yesterday. Microsoft kind of crashed the market. And there were two things. There was a report. We're going to pull up the stock chart. Analysts at TD Cowen posted a note on Friday suggesting that Microsoft had canceled some data center leases, causing the tech sector to spiral. The analyst cited channel checks that indicated Microsoft canceled leases with at least 2 private data center operators. However, the company clarified later that it's sticking to its plan to allocate more than $80 billion of its cash to capital expenditures. With that said, it acknowledged that it may strategically pace or adjust our infrastructure in some areas. The company says it's well positioned to meet the current and increased customer demand, saying last year alone, we added more capacity than any prior year in history. While we may strategically pace or adjust our infrastructure in some areas, we will continue to grow strongly in all regions. This will allow us to invest and allocate resources to growth areas for our future. Microsoft has been stagnant, and you're getting to a point at $400 where it's at the bottom part of this range that it's traded in. Now, is this an opportunity? For me, it is still a super large portion of my portfolio. It's a strong buy from Wall Street. They think it's worth $500. It's a 25% upside. That's huge. The quant has had it as a hold for a very long time, ever since 415. Its valuation is the problem. The valuation and the growth. Their OpenAI relationship is a problem. We want to see that OpenAI isn't just using Microsoft, that they're preferring Microsoft, and that's not happening right now. Okay, we saw with Apple. OpenAI went and said, you know what? We're going to get in with Apple Intelligence. We're going to be the first ones to launch out there. So, Scam Altman, as Elon calls him, that may be the part of the problem. So the biggest movers, though, today, it's earnings. I mean, the stock gainer ever surged 26% after the company delivered strong Q4 results. Now, I will tell you, I've got some puns on HIMS coming up because HIMS is down like 20% because of the it's basically, listen, it's HIMS. This was a short squeeze. It got pushed up. There's a lot of people talking about this one. I don't believe in it. It's not my particular choice, but everybody says this is the next. I think it's a marketing company. I think HIMS is a marketing company, and I think you're seeing it today with the short squeeze done. And I think people are getting out of their short squeeze, and you're seeing it just plummet. Right now in pre-market, let's see, it's down 21% at 40. Where do we see support? 25. If you're in this at 40 right now, I'd say 35 would be your first stop because that was the first resistance right here. Is 40 a stop? No. I mean, if we just look at this and we say, okay, from a volume perspective, and again, technically speaking, we're going to pull this back here to where it was selling November 25th, where it popped up a little bit, okay? And then it pulled back, and then it popped up. Where do you see volume in here? I see volume at 30. So at 40, their current earnings didn't give me any favor, okay? On a weekly, you're still super stretched. I would say 25 is your support. So as we get down there, maybe 25 makes sense to start adding it. Crypto stocks just got decimated overnight to its lower levels since it's under 90,000, by the way, Bitcoin. Amid ongoing struggles in the cryptocurrency market, notably decliners, BitDeer, CleanSpark, BitDigital, Riot Platforms, Marathon, all sliding more than 4%. iBit is down like 6%. Zoom, we'll go over Zoom. Cleveland Cliffs, I will go over Cleveland Cliffs. You know what? Let's go over Cleveland Cliffs right now because the company dropped after the company reported weaker than expected Q4 results with revenues declining. This is key. The CEO, he noted that Cliff's high-end steel focus results in a higher fixed cost structure, making it more vulnerable in weak markets. However, he expects Q4, which is the next earnings period, to mark this earnings period to mark the bottom, with inventory buildup positioning the company for a rebound in 2025. This is interesting. Now, this is in the core portfolio. It is in the core portfolio, and I will tell you. Look at this chart that on the weekly. Okay, we said that when it breaks this, we're probably going to come up here. This one's down in pre-market. It's down 3% at 10:04. We can take a look at the 4-hour right here, okay? Where did you bounce from? That 7 is it? You bounced right up against that 12. Okay? And we're continuing to slide. This one doesn't trade very well in the 4-hour algorithm, but I will tell you, this range between 7 and 12, once you get to that 12, start selling. It's clear that's a resistance until it becomes support. So, the biggest movers of the day, again, that's it. Now, this was a great look from Zip Trader, Tom Lee. Tom Lee, news alert, he's a bull. I mean, I'll like this one. News alert, he's a bull. Okay, he's a bull. He's a permabull. He's got his Granny Shots ETF, GRNY, I think is what it is. GRNY. It hasn't done fantastic. I mean, needless to say, it has not done fantastic whatsoever. But he's got 5 names: Hims, AppLovin, Spotify, Carvana, Interactive Brokers. Go and look those up. Tell me which one you like. Go and watch the video. It's a good video. Charlie goes over everything. He likes a lot of those stocks. He also likes Palantir. So go back and watch that video. I think it's very good. Now, let's talk about SMCI. Because SMCI, it's D-Day for them. Okay, you can read this article. This is from February 18th. And Supermicro shares spike ahead of earnings deadline. The quote from Seeking Alpha analyst Hunting Alpha: management has unequivocally assured investors that they would meet the February 25th deadline to catch up on delayed filings. Okay, there are also no changes to previously reported financials. I think that is uplifting an overhang on the stock. It seems opportunity to buy before February 25th. If Supermicro can effectively move beyond its accounting issues, it is poised to experience significant growth due to artificial intelligence center demand. Again, the accounting issues are big. This was a Hindenburg short report. By the way, since then, Hindenburg has gone out of business. But SMCI has shot up. Where are you today in pre-market? You're flat, 51.69. Is this a significant level? Well, you can see from a weekly perspective, it's not a significant level. I mean, you're just crossing the 50-day. But the 50-day is still moving negative. Do you have anything in this stock that tells me, oh my God, I've got to buy it before today? No. I mean, you got to, on the 4-hour, you got to cross a MACD that's potentially crossing down. You got a gap below to about 48. If you think they're going to file, I mean, look at the spike in volume. But if we pull this back, I'm going to pull this back on a weekly. We're going to pull the volume to, let's see, we'll pull it here where it really started to drop. That's where it's at. Do I see volume here? I see some volume between 38 and 44, but I don't see a whole hell of a lot above here. There's still people holding here at $80 and $90, but they may be rewarded. Who knows? Who knows? But Supermicro, go and read about it. Today is D-Day for them. Now, we talked about using Trendspider. One of the things you may want to do in Trendspider is in the what's happening now. This is a political purchase. Again, I filtered this. I said, okay, give me something with AMAT because I wanted to see the last purchases from AMAT. Well, we got Ashley Moore, who just purchased $100,000. It's $100,000 and $250,000. It's valued in between there. It's a big purchase of Applied Materials. So let's go look at Applied Materials. Let's pull up our 4-hour algorithm and let's see, should we follow these some of these political people? You can get Nancy Pelosi and Trendspider. You can get all of that. Is Applied Materials a buy in the 4-hour algorithm? Well, it's not. Right now you're out, but it could get you in. Applied Materials is a semiconductor stock. We don't know when she bought it. She bought it in the last 90 days. You've got a gap up here to 182, which came with their earnings. It started to fill that gap, didn't totally fill it. So you've got a gap between 178 and 181. You're trading at 168. Well, how would I play this? I would play this. Now, I'm not a huge fan of Applied Materials. I don't own any of Applied Materials. Maybe it's an ETF, but it's a hold in the quant. Growth, valuation. The only thing that's good about this one is the profitability. It has not done well. Wall Street thinks that it's worth $207. Okay? There are 37 analysts that cover this. Maybe it's a good thing. Maybe it's a bad thing. I don't know. But this stock chart doesn't provide me a ton of confidence. Even though it's oversold right now, maybe it's a good thing, maybe it's a bad thing. If it fits your risk tolerance, go and grab it. But again, you can follow all of that in Trendspider. Now, how do you get Trendspider? We talked about how to use it. Well, go over to Linktree, linktr.ee/daily stock pick. It's right here, the top one. You can try it out for 2 weeks for $20. $20 per month or for a 2-week trial. Sorry, it's $20 for a 2-week trial. And you get everything that I just showed you. The only thing that you don't get is my 4-hour algorithm. You have to sign up for a yearly subscription for the 4-hour algorithm. I did get an email from somebody yesterday who said I signed up in December and I just haven't had time to learn how to use it. It is the 2-week trial. Don't expect to be as proficient as I am after a week on this damn thing. You will need time to learn this software. It is super deep. There are things that in here that I don't use. Like for instance, unusual options. There's a ton of these things. You can look at here, SPY, unusual options, large outside the money puts, insider trades, all of the insider trades that you want, analyst estimates, buy rank. You can put all of this stuff on your chart. Okay. I don't use that stuff. It is an incredibly deep program to use. It is incredibly powerful. Like I showed you, you can go and find stuff. But go to Linktree, click on that top link, try it out for $20. If you sign up for a yearly one, I will email you my 4-hour algorithm, watch list, all of that stuff. Now, Seeking Alpha is another one that you can buy from Linktree. And I suggest the bundle, okay? You can get Seeking Alpha Premium. Just by itself, which is, I don't like that one. Seeking Alpha Premium, you get from $30 off and a free 7-day trial, but I suggest you get the bundle. Okay, the bundle is right here. It's the second one. The third one is Seeking Alpha Premium or Alpha Picks by themselves. You can click on those. You save $30 to $50. You get a free 7-day trial on Seeking Alpha Premium. But I suggest the bundle. And the reason I suggest the bundle is because of the performance of Alpha Picks. It has done extremely well. I think it's a great portfolio. It has not done well in 3 months, but you look at 1 year, it is still beating the S&P. And Seeking Alpha Premium gets you articles like this. The stocks that matter the most to hedge funds, Goldman Sachs. These are the top 10 holdings appearing most frequently in 13F filings. Now, the key to this list represents a tool for investors seeking to follow the smart money based on 13F filings, said Ben Schneider, senior strategist on the U.S. portfolio strategy macro team at Goldman Sachs. The list has 50 stocks who perform will largely influence the long side of many fundamental-driven hedge funds. The list has outperformed the S&P year-to-date 9.6% versus 4.1%, and has outperformed the same index, meaning the S&P, 60% of the quarters since 2001. Here is the very important list, or the VIP list of hedge funds with data from December 31st. Okay, you have Amazon, Meta, Microsoft, NVDA, Google, Apple, Mag 7, Uber's in there. Go and read that article. Again, find your opportunities. We know that power is going to be needed to run AI. But yesterday, these stocks got destroyed. Constellation Energy down 6%, Vistra down 5%, Talon Energy down 1.3%. Okay, in Monday's trading after TD Cowen note warned of Microsoft canceling their data centers. I don't care what it is. I think that these things have just run up too much. This is healthy. This is part of a healthy market where it pulls back. Look at that. This is a utility. This is Constellation Energy. That's a utility that's going straight up past its 50-day. On the weekly, you're stretched. You've got a MACD cross down. This is part of being a healthy stock. Okay? Algorithm has you out. It had you out February 21st. It had you out on Friday with a loss. The algorithm makes you 218% in this stock over 24 months. Buying and holding, 206%. You win 50 to 53% of the time. Wait for this one to find an entry. VST, same thing. 323% on the algorithm, 523% buy and hold over the last 24 months. This one, you only win 33% of the time. But if you look at a weekly, it is stretched. It is still stretched. On the 4 hour, it looks decent. Looks like it would, provide you, oh my God, I've got to get into this one. It's under its 200-day. It's under its 50-day. I want to get into this. It has gaps all the way above this. 189 is the gap up there. Power will be back. It just needs to rest a little bit. Okay? 6, brace for turbulence. 6 stocks. These are 6 best stocks to buy to navigate the turbulent market. Steve Kress goes over them. One of them is Brinker. EAT. This is a alpha pick. Oh, I don't want Earth. Hold on, that's Earth token. EAT. EAT is the symbol. This one's had a nice pullback. Algorithm just got you out with 118% gain. When do you want to get back in? When the algorithm tells you to. I like this one. I like this one a lot. But again, weekly, it's stretched. It is incredibly stretched. If you go and you look at EAT in a fundamental, again, strong buy in the quant, the valuation's stretched. What does Wall Street think that it's worth? $183, which is 19% upside. They have it as a hold. It has been a hold for a long time from Wall Street. Wall Street hasn't loved this one. Wall Street had this one as a buy, but there's 19 analysts that cover this. 14 say hold. But they say hold because technically, that is just too stretched. Too stretched. But when you get back down here to 126, 125, if you get back down there, that would be a load-in opportunity. But these are the 6 best stocks for volatility. And EAT, God, it's a great one. Again, Alibaba, ByteDance. Let's talk about NVIDIA, because NVIDIA's earnings are tomorrow. And we're seeing quite a pullback today in NVIDIA. I think it's down. Actually, it's back up to 130. Would I buy this one before earnings? No. If you don't own this one, if you didn't buy this at 100, if you didn't buy this at 110, if you didn't buy this at 120, why are you buying it at 130? If you own it, hold it. I don't think you trade this one around earnings. Now, the danger is they could literally have a huge, huge quarter. And then they say, maybe they're not earning. Maybe the hyperscalers aren't going to buy as much. Microsoft canceling data centers? That's danger. What did Jensen say last week? Jensen said last week DeepSeek was overdone. Was that a sign? I mean, he can't talk about orders. We know that Blackwell orders, they're sold out for 2025. You're trading on 2026. Is the valuation stretched? Not really. It is. This is a stock that's basically trading on growth, and their growth needs to sustain. If for some reason this slips at all, this is going to be a problem. So let's go over some of the dangers. We know DeepSeek, even though Jensen said it's not a problem, we know DeepSeek didn't use CODA software, which is the NVDA software that's required to use the chips. They found a way, just like nature. Nature finds a way. Wall Street still thinks this is a $170 stock. Now, if you're going to buy before earnings, expect the possibility that you could lose 20 or 30% after earnings. Doesn't make sense to me. The upside, 31%. The downside, probably the same amount. Options are implying a 7% move either way. And then you've got more bad news. Trump administration eyes beefing up Biden-era chips on China. That could be bad because right now, Alibaba, ByteDance, and Tencent, they've been boosting their orders for the H20 artificial intelligence chip, rising demand for DeepSeek. They're ordering a ton. Is Trump going to extend it so that NVIDIA can't sell into China? Maybe. So that's the issue that you have to deal with. Again, Jensen Huang met with Trump. Jensen Huang, I think, wants to protect national security just as much as the rest of them. But again, Alibaba, that one got killed yesterday. In fact, let's look at Alibaba. Is that a buying opportunity? Because we know this one got cheap. Well, it's down at 129. Let's see, in pre-market, it's at 133, up 3%. Is this one a buy? Look at the weekly. I think that 120, we talked about 120 being the old resistance. I think it's now support. You're at 129. If you want to start a position in this, 120, if you break 120 and you buy at 129 and you break 120, that would be your signal to actually get rid of it. Or trim it, or buy for the long term. I think this one's if we see a golden cross of this 50-day on the 200-day on the weekly on this one, look out, take off. So again, it's all risky. I think the market's just pinned on earnings to tomorrow afternoon. We've got a ton of earnings, just so you know. I'll go over a bunch of them today. Let's go over some of the things that I'm seeing. Domino's Pizza yesterday. It's bad pizza. I mean, it's just bad pizza. But traffic slowed, and they missed, and they were down 1%. Again, traffic slowed. That's not good. Then here are my puns for Hims. Hims goes soft. It's a shower, not a grower. Someone get a fluffer. There are probably way more puns, but Hims tumbles 20%. It's down 22% in pre-market. Is this one going to come back? I don't think, I think it's a marketing company. I don't think this is doing anything other than marketing. And we know that they can't sell the weight loss drugs. So we know that that's coming to an end. Revenue of 520 with expanded weight loss offerings. They're expecting to continue to do. I just don't think that they're going to be doing it. So, it's up 4% in pre-market. Is it overdone? I think this one, if it gets back down to 25, I may look at it. But the valuation's just too stretched for me. It's kind of like Palantir. Palantir at 50, it looked too stretched. It got to 120. Doesn't fit my risk tolerance. Does it fit yours? I don't know. Another one, Tempest. If you want to read about, the Nancy Pelosi stock that took off when Pelosi bought it, it's a buy from Wall Street. The Wall Street thinks that it's a buy, but they think it's worth $60. Guess where it's trading in pre-market? $60. You want to see about their earnings? Here's the entire presentation of earnings. You can go and look at it. Let's see. It's right here. Just go and look at it. Earnings call transcript. You can go and read about it. But TEM, from a chart standpoint, it's a bit rich for me. Now it comes down here to 50. Where's 50? It's the 200-day. You got a gap here when Nancy Pelosi bought it between 35 and 42. You're probably coming back down there. Again, anything that goes up like that is going to have to come down to at least meet some sort of support. So people will just start selling it. We also got this morning from Home Depot. They gave weak guidance, warning that the housing market may not improve. Interest rates are just not coming down. The key point in this, remember, Walmart last week said the consumer was showing weakness. So in my mind, it's a little bit of a danger. Am I selling out of this market? No. The key here is don't fight the Fed. With the lack of reduced rates in the markets, the threat of tariffs and other policies that are inflationary, plus don't applaud the Doge laying off of government workers, because the one thing that's been holding this market up has been the job market. You start laying off hundreds of thousands of federal employees, that could be a problem. And again, remember, Elon said there might be pain. That could be a problem. So before you start touting all of that stuff, just make sure you know and where you stand. If you're not sleeping at night, get out. I don't believe that this is going to happen. I think the Trump administration wants to base their success on the stock market. I'm buying in on that. Now, Zoom is down in pre-market, but they noted they're going to launch an AI companion tool in April. Is this a good opportunity to get into Zoom? Well, Zoom's a hold in the quant. Why? Because their growth. They can't grow. It's a video platform. I mean, everybody who's subscribed to Zoom, they're already subscribed to Zoom. Is AI going to push them over the top? I don't know. They may be able to expand their actual charges, though. And that AI tool may provide them an opportunity. Now, for me, if I were to look at this one, I would trade it. I would absolutely trade this one. I would look at a 4-hour algorithm. I would be looking to buy this under the 200-day. Look, weekly, is it stretched? Not really. I mean, we could make a run to the 200-day, which is at 118. I would guess that this would go to about 90 or so. I would guess it wouldn't come all the way up to 120. Where does Wall Street think that is? They think it's worth $91. Again, I think it's closer to that. I would trade this one. Find a strategy that works. Tonight's earnings, I'm going to go over these super, super fast, okay? Super fast. And it's just going to be a word on it. Intuit, interesting, not compelling for me. I think AI is making taxes simpler, and I think there's a lot of opportunity for AI. I'm not following with TurboTax this year, first year in forever. It's interesting, but not compelling. Kava, this one, can't find a floor. Can't find a floor. I mean, literally, it's still, it's not going to find a floor. It ran up too fast, too far. We don't even have a 200-day on this one. So Kava, for me, trade it. Find a strategy that works. You know what works? The 4-hour algorithm. Over 19 months, it makes you 140%. Would I be getting in prior to earnings? No. But if after earnings, the 4-hour algorithm gets me in, I'm going to get into that because it's a coin flip, 47% win rate. Workday, we talked about this one at the beginning. This might be with that bullish engulfing candle, might be a good opportunity if that fits your risk. Lucid, I think these are overpriced vehicles. Honest to God, maybe people hate it. Enough rich people hate Elon that they're buying Lucid. Might be a good pop. Valuation makes no sense to me. My answer would be no on this one. Axon, this is a shy stock. It's just expensive. There's a gap down here to 475. Again, we needed that pullback, but we haven't gotten enough. Then you've got First Solar. Solar just hurts my heart. FSLR. This again, I've gotten burned on Sedge before. Am I looking to get into this one? No. Is this administration favorite? No. Not one that I'm looking into. Lemonade. This one's interesting because this one is insurance. And insurance has been doing really well of late. In fact, I think Progressive and some other ones were good yesterday. Just gains. This one has found its 200-day as support. The 50-day has started to move. Your Bollinger Bands have cinched up. That's a big move, by the way. That may not look like a big move on a weekly, but from October to December, October to November, 1 month, 201%. Could it move higher? It could. This one's interesting, but they have disappointed before. Now, it's a hold in the quant, and the reason is the profitability. It's just that they're an AI insurance company. That's it. It's interesting to trade. The 4-hour algorithm makes you 98% versus 113% buy and hold over 2 years. Okay? You've got in at 36, you're out with a 7% loss. That gain right there is 200%. That's just huge. So that one's interesting. Zeta. Went over Zeta last week. This is an alpha pick stock. And I went over it last week. I think you have the opportunity to cover this gap between 35 and 36. Now remember, this had a short report on their last earnings. And then they guided. It was bad. Look at that. I mean, that was a short report on top of just relatively decent earnings, nothing crazy. But when you look at Zeta, I think it's got an opportunity to actually come back up. Now, what does Wall Street think? There are 14 analysts that cover it, $36. Does that get us back to this gap? Yes. Ironic, isn't it? So is it down enough? You can see on the 4-hour, it's just moving down. The 4-hour algorithm makes you 19% versus 127% buy and hold. You have to find a different strategy. My strategy on this is alpha picks, but look at that weekly. Look at that weekly, how beaten down that is just since the last earnings. You got out of this one and then you came back down. That's interesting to me. The next one, Instacart. I haven't ordered delivery on my groceries, but the 4-hour algorithm makes you 77% over 17 months versus 19% buy and hold. You're in at 43. Are you going to get out? That has run a lot. The valuation is still stretched. It's still stretched. The valuation here, they're not making money. They're not making money. Wall Street thinks that it's a $52 stock. That's 6% upside. That's not large enough for me to think, oh my God, I'm going to get into this one with that run up. Coupang, which is a South Korea, I think, stock. Coupang, software stock. Maybe a golden cross coming. Algorithm got you in here at 22. Algorithm doesn't work on this. Buying and holding makes you 59% over 2 years. The algorithm, it only wins 28% of the time. Doesn't work. So I'm not necessarily looking at it. But do I see a gap up here to 26? Yep. Let's take a look at a weekly. Is it stretched? Nope. Just kind of, your golden cross of your 50-day on your 200-day. And you've got a nice little support up there or a resistance at 29, which is the previous high where it just lost it. Coupang software. Let's go over here. Coupang. And I probably should have made this the paid portion, but it is what it is. $28. Ironic. $28. Again, I'm not looking into this. You can see the earnings preview right there. But let's see. Shep wrote on Spotify. It would be a rad topic to talk about when to consider selling. General guidelines, maybe. I assume when a company's story is not in line with your expectations is one. How about some interesting data points that might also guide to sell, to hold, declining margin pressure, competition? Get your ass over to Linktree. Yes. Well, ironically, if you go to the Daily Stock Pick homepage, dailystockpick.substack.com, what's the most popular? It's my collaboration, when to sell, with my weekly stock. So it's in there in the newsletter. And I give, I think, 5 tips on when to sell technically. And my weekly stock gives 6, or I think 5 or 6 additional ones where he says, conclusion. So this is Shep, you asked, I delivered. And I delivered on February 15th of 2024, last year. So it's a good one. That's a great one. So think about it. Maybe sign up for the newsletter right there. Now let's talk about crypto. I have said it before. I will say it again. 1% of your portfolio could be in crypto. And will you get hurt in the short run? You may. IBIT is down 5.24%. I am going to be looking at buying this under 50. Again, if we look at this one, where's this gap? It's between 44 and 46. We are just seeing weakness in crypto. IBIT on a weekly, look at that. Yes, I bought at 55. Yes, I bought at 58. Yes, I bought at 56. Have I bought in the 40s? No. Will I? Yes. I don't have 1% of my portfolio in this ETF yet. I've been adding very sparingly. The 4-hour algorithm was my guide, and it doesn't perform as well as buy and hold. But my 4-hour algorithm was my guide, and you can see we've been trading sideways since November? And we finally broken down. It's down below 50. Now, if it opens up and it stays down here, the 200-day on a 4-hour is at $50. If you look at this one, and we can go and look at Bitcoin, you get and when you sign up for Trendspider through me and get the yearly, you get the Bitcoin versus USD. And by the way, you get this no matter what. But it's in my watch list. Okay, do we see anything here? I see weakness. Let's look at a weekly on this one. We can talk about that. I do think that 109 is providing resistance. Now, where's the support? Probably 75,000. Honest to God, if we look at, we can see the volume. I'm going to pull this back to, let's pull it back to September, where we really started to see the run up. Where's the volume at? There is no volume profile between 74 and 92. This will get filled in. You're going to see it pulled back down. I still expect this to hit 150 at some point in time this year. So that's it. That's the podcast. I will talk to you guys tomorrow. I will put out my schedule. Friday, there's not going to be a podcast. And all next week, I believe there won't be a podcast. There might be one on Tuesday, but I'm going to be flying all over the place. So I will talk to you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.